Okay, so today we're going deep on Bitcoin,
Right.
but not just Bitcoin itself,
Mm.
more like we're using Bitcoin as a lens
Yeah,
to look at kind of the whole financial landscape,
exactly.
you
Yeah,
know, the global economy, central banks, the whole thing.
absolutely.
And we found a really interesting article to kind of kick off this deep dive with.
Yeah.
It's from TradingView News, and it features analysis by a guy named Jamie Coutts.
Yeah.
He's the chief crypto analyst at Real Vision,
Mm-hmm.
so he seems to know what he's talking about.
Yeah, he's a pretty sharp guy.
For sure. For sure.
Real Vision's got a lot of smart people over there.
Yeah, yeah.
So we're in good hands.
So basically the mission here is to
Yeah.
distill, the key takeaways from this article
Right.
and what's happening in the markets.
Yeah.
Give you a good sense of what's going on
Sure.
without you having to wade through,
Yeah.
all the noise.
Yeah, information overload.
Yeah,
We're
certainly.
cutting through that for you.
So what we're really trying to figure out here
Right.
is what's driving Bitcoin's price right now.
Mm-hmm.
And what these movements might be saying
Yeah.
about, the bigger picture, the economy,
Right.
central banks,
Exactly.
that sort of thing.
Yeah, the big players.
Yeah, yeah, exactly.
So jumping right into it,
Yeah.
this article points out that Bitcoin's been on a bit of a roller coaster ride lately.
Oh, for sure.
It took a pretty big dip, below $80,000
Yeah, I remember that.
after hitting almost 110,000.
Wow. So like a, 25% drop or something?
Yeah, something like that. Pretty substantial,
Yeah, that's a big move.
definitely.
Huh.
And they're attributing this volatility, to a couple of things.
Okay.
Trade tensions
Oh, yeah, of course.
still kind of ongoing, and then just general worries about a recession.
Yeah, right. Always looming.
Always there in the background. Yeah, exactly.
So nothing new there, but I did find it interesting, though. They also highlight
Yeah.
the weakening U.S. dollar.
Yeah, that's the interesting part.
Okay, so the DXY.
The DXY, right?
It's down
It's down from like 110.
to like 103, they said.
Yeah, 103 since mid-January. So
And this is during,
right, this is all happening.
Trump's second term.
Exactly.
Yeah.
Yeah, second term. So that timing's kind of interesting, right?
So what does this dollar weakness mean
Okay.
for for Bitcoin, for our listeners?
Yeah, good question.
Why should they care?
Well, it seems like this weaker dollar could actually be good for Bitcoin.
Really?
Yeah, so historically when the dollar weakens, alternative assets like gold
Mm-hmm.
and increasingly,
Yeah.
Bitcoin,
Okay.
they tend to become more attractive to investors.
So it's like a seesaw.
Exactly. Dollar goes down.
Bitcoin goes up.
Interesting. Okay.
Yeah.
So then we come to Jamie Coutts
Right. Jimmy Coutts.
and his analysis, and he has this
Yeah.
kind of striking analogy, I thought.
Yeah.
He says Bitcoin is playing chicken with central banks.
Yeah. It's a bold statement.
I like it.
It grabs your attention.
So what's he talking about there?
Well, he's really focused on these two key metrics
yeah.
that he thinks are going to influence how central banks react.
Okay.
And ultimately, how Bitcoin's going to perform.
Makes sense.
So the first one is rising volatility in treasury bonds.
Oh, yeah, the bond market.
Yeah, the bond market. And there's this index that tracks it called the Move E Index.
Move E Index. Okay, I've heard of that.
Yeah.
But just for our listeners who maybe haven't,
Sure, yeah.
what's happening with treasury bonds?
Right. Why do we care?
So important,
Yeah, why should we be paying attention to this?
Yeah.
Well, Katz is basically saying that, U.S. treasuries are like the foundation of the whole global financial system.
Okay.
They're seen as the ultimate safe asset,
Uh-huh.
right? So they're used as collateral in tons of transactions worldwide.
So when their price starts fluctuating a lot, getting volatile,
Yeah.
it kind of signals that there's some instability, at the core of the system.
At the core, yeah.
Yeah. And this increased risk makes lenders nervous.
Makes sense.
So they start demanding bigger haircuts on those treasuries,
Okay, so bigger haircuts meaning like
meaning they're going to lend you less money.
for the same amount of collateral.
Exactly. Yeah. They want more security.
Got it.
So basically, if treasury bonds get shaky,
Yeah.
the whole system can experience like a liquidity squeeze.
Like a tightening?
Yeah, exactly. Things get a lot tighter.
Okay.
And Coops specifically mentions that if the MOVE index, that volatility measure,
Mhm.
goes above 110,
Above 110, okay.
that's kind of red flag,
That's when central banks start to really worry.
Yeah, it suggests a level of instability that could be dangerous.
Interesting. Okay.
Yeah,
So that's one pressure point he's watching.
right. That's one piece of the puzzle.
So what's the second thing in this game of chicken?
All right, so the second thing he's watching are corporate bond spreads.
Corporate bond spreads.
Yeah, so this is basically the difference in yield
Uh-huh.
between corporate bonds, which are a bit riskier.
Yeah, they could default.
Exactly right.
Right.
And those super safe treasury bonds we were just talking about.
Okay.
So when this spread widens, it means investors are demanding a higher return.
To hold corporate debt
Yeah, they want more compensation for the risk.
makes sense. They need to be incentivized.
Exactly.
Okay.
And so this is basically a sign of growing risk aversion.
Okay.
Investors are getting a little spooked,
Uh-huh.
and they're less willing to hold those riskier corporate bonds.
Unless they're getting a really good deal.
Right, unless they're getting paid well for it.
Okay.
And Coutts is saying that if these spreads keep widening,
Yeah.
it could be bad news for risk assets in general,
Okay.
and that includes Bitcoin.
Bitcoin too.
Yeah, Bitcoin's definitely in that category.
Uh,
It suggests, this flight to safety.
People are getting nervous.
Yeah, exactly.
And moving into, safer assets.
right.
Okay, so we've got these warning signs, right?
Some potential red flags.
But then Cates also seems optimistic.
He does, yeah.
This is where the weakening dollar comes back in.
Exactly. It's a potential tailwind for Bitcoin.
Okay, so even with all this this volatility,
Yeah.
he's still bullish on Bitcoin.
Well, he's cautiously optimistic,
Cautiously optimistic.
Yeah. He's not saying it's a sure thing,
Mm-hmm.
but he does think the dollar weakening is a really important factor.
Okay.
And he points out that the big drop we saw in the dollar in March,
Yeah.
that historically has lined up with some pretty bullish moments for Bitcoin.
Really?
Yeah. Like think of it as either the bottom of a bear market,
Okay.
like the low point before things start going up again,
Right.
or like a continuation of a bull market.
Okay.
It's like the dollar weakening gives Bitcoin this extra boost.
Interesting. Okay.
Yeah.
But of course, Bitcoin doesn't have as much history as,
Right.
as stocks or bonds.
Yeah, that's the caveat. Bitcoin's still relatively young.
Yeah, it's still early days.
Exactly.
So we don't have as much data to go on.
Right.
But still interesting correlation.
Yeah, it's worth paying attention to for sure.
Okay, so what else does Coutts see as
Yeah.
potential catalysts for Bitcoin going up?
Okay, so he lays out a few possibilities.
Okay.
First, he talks about nation-state adoption.
Nation states. Okay.
Yeah, like countries,
Okay.
He thinks we could see this like global race.
A race.
Yeah, where countries start adding Bitcoin to their reserves.
Oh, wow. Like they do with gold.
Exactly, like gold. Or maybe even ramping up their own mining operations.
Wow. That would be huge.
It would be a major shift, for sure.
Yeah.
Okay, what else?
So another thing he mentions is corporate accumulation.
Corporate accumulation, okay.
Yeah. So more companies, adding Bitcoin to their balance sheets.
Right, and he specifically mentions MicroStrategy,
MSTR.
MSTR.
Yeah.
Yeah, they've been big on Bitcoin for a while.
Yeah, I've heard of them.
And he thinks they could add a ton more this year.
Like how much are we talking?
He throws out some numbers like maybe 100,000 to 200,000 Bitcoin.
Wow, that's a lot of Bitcoin.
Yeah, it's a serious amount.
So if more companies follow their lead.
Yeah, it could really boost demand.
Okay, that makes sense. What's the third one?
Okay, so the third one is Bitcoin ETF.
ETFs. Okay.
Yeah, so those exchange-traded funds,
Right.
they've made it a lot easier for regular people to invest in Bitcoin.
Right.
And
Yeah.
Coutts thinks we could see these ETFs doubling their Bitcoin holdings.
Oh, wow.
Yeah, so again, more demand.
More demand. Yeah,
Yeah.
okay.
Yeah,
And his fourth catalyst is
yeah, this one's a bit
a
more,
bit more out there.
yeah, metaphorical.
He says the spice must flow.
The spice must flow. Yeah.
What's that all about?
So that's a reference to the book Dune.
Dune. Okay.
Yeah, where spice is this like super valuable resource.
Right.
And so Coutts is using it as a metaphor for liquidity in the market,
Oh.
that flow of money.
Right.
And he's basically saying that for Bitcoin to keep going up,
Yeah.
there needs to be enough of that liquidity.
Got it. Like the fuel for the rocket?
Exactly. Yeah, if that dries up,
It's going to be a problem.
yeah, even good news might not be enough to keep it going.
Okay, that's interesting.
Yeah.
So, shifting gears a little bit,
Okay.
Coutts also talks about a key price level for Bitcoin
He does, yeah.
and how central banks might respond,
Right.
What's he saying there?
So he's basically saying that if Bitcoin drops below the high 70,000s,
Below the high 70,000,
Okay.
like that could be a sign of a bigger shift.
like a change in sentiment.
Yeah, like maybe the bulls are losing their grip.
Oh, great.
And then in terms
Yeah.
of central banks,
Yeah?
He thinks they might step in.
Intervene.
Yeah, if that volatility in treasury bonds and those widening credit spreads,
Mm-hmm.
if those keep going,
Okay.
putting pressure on asset prices
They might have to do something.
to try to stabilize things.
Exactly.
So it's really this this interplay between,
Yeah.
Bitcoin's price,
Right.
what's happening in the bond market,
Yeah.
and then, the potential for central banks to step in.
That's all connected, yeah.
That's really at the heart of this whole analysis.
It's a complex picture for sure.
Yeah, it is.
But I think Coots does a good job of laying it out.
Yeah, I think so too. And
Yeah.
he brings it all back to that game of chicken analogy at the end.
He does, yeah.
And he's saying,
Yeah.
with central banks maybe running out of options
Right.
and all these Bitcoin HO dealers,
Those strong ands, yeah.
just sitting tight.
Not selling
Yeah, he thinks the advantage is shifting.
to the Bitcoin holders.
Yeah, like Bitcoin's calling their bluff.
It's a fascinating dynamic for sure.
Yeah, it is. It is. And the article mentions that
Oh, yeah.
at the time they wrote this Bitcoin was around 82,000.
82,000, okay.
So even after that drop,
Right.
it's still pretty high.
Yeah, it's held up relatively well.
So to sum it all up for our listeners,
Okay.
it seems like Bitcoin's kind of caught in the middle.
It is, yeah.
You've got these macroeconomic headwinds, like
Right.
that shaky bond market.
Yeah, that's definitely a concern.
But then you've also got potential tailwinds,
Right.
like that weakening dollar.
Which historically has been good for Bitcoin.
Right.
Yeah.
So it's really going to come down to,
Is, yeah.
how central banks react
Mm.
and whether those Bitcoin HOTO dealers
Yeah.
stay strong,
Keep HO dealing.
Yeah, it's a real,
It is.
it's a pivotal moment.
It's a fascinating time to be watching these markets, that's for sure.
Yeah, no doubt about it.
It's this clash between, this new decentralized digital asset.
Bitcoin,
Yeah, Bitcoin. And
Yeah.
then these more traditional forces,
the dollar, central banks.
Yeah, the old guard.
It's a really unique situation.
It is, yeah.
So what do you think? Given everything we've talked about, how do you see this playing out?
That's the million-dollar question, isn't it?
It is. It is. And, what does it mean for the rest of us?
Right.
Not just for Bitcoin, but for the global economy.
Yeah, the implications could be huge.
Yeah, definitely something to think about.
Definitely. And for anyone who's really interested in digging deeper,
Yeah.
learning more about central bank policy,
Mm-hmm.
the U.S. dollar, the bond market,
Yeah,
all that stuff, it's definitely worth exploring.
for sure.
Yeah, it's a rabbit hole, but it's a fascinating one.
Well, thanks for taking this deep dive with us.
My pleasure.
We'll be back soon with more analysis of the forces shaping the world.
Sounds good.
All right.
See ya.